Dembo, Ohio, Ni hao. You guys ready to do some Forex? All right, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We're here, we're there, we're everywhere. Stationed around the world, watching the charts 24/7. We gather here today at this time to collaborate, to look at technical and fundamental analysis and come up with trade plans that should last today, this week, right? Well, I guess today is the last day of the week. Next week, the rest of the month, the rest of the year. Lots going on. It's an interesting life. So let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, guten Morgen. My name is Wayne McDonell. I am a currency trader just like you, trying to float down the river we call Forex. It's very difficult to swim upstream, huh? Data says, hey, nice statement from the ECB today. No hike for the current period. Some market in shock. Yeah, well, look, I don't think that's the surprising part, but we can, well, maybe let's talk about this later, Theta. I don't think that's surprising, but the new news, of course, is over the last couple of weeks, Europe's getting crushed by COVID again. Okay? I think it was Austria that shut down the whole entire country. Wow. So anyways, that ain't good for business, right? So anyways, hey, so let's explore some of these issues. Let's go through the charts. I want to do dollar pairs, yen pairs, gold, oil, Bitcoin, and really maybe some exotics, but really ultimately you're the boss. I am just a servant. So let me know how I can help. And I would like to contribute to your success. So thank you for being a subscriber and the hard work you put into this and your positive energy every single day. I'd also like to thank Traders Way for being part of our community as well. They're a boutique foreign exchange brokerage firm. Hey, but guess what? The spreads are low, right? The execution speed is fast, and they actually pay you your full swaps. Many brokers don't do that. And some brokers even charge you negative swaps no matter what you do. And that's really, I don't know, unnecessary, maybe unethical, but whatever. So Traders Way has earned my loyalty and respect. If you visit tradersway.com, open up a demo account, maybe they'll earn your loyalty and respect too. And if so, when you're ready to trade real money, guess what? You'll have an execution partner to your successful Forex trading business. Pete says, how often do you look at currency futures? I don't. Okay. Robin says, for all the vaccine, but don't force people. That's no good. That's true. Right? I know somebody just a week ago announced that he and his wife are having additional children. In fact, she's pregnant with twins. They're also anti-vaxxers, and they now both have COVID. And she's pregnant, so I hope they're okay. And so anyways, so I hope they're okay, because that might be scary. So anywho, one of the things that I'm worried about over the next, let's say 12 months, is that there's a new uptick in COVID and it slows the economy down. Okay. So when I see dollar strength or really everything else weakness, I mean, you could look at it that way as well. I'm worried that, COVID is the cause because economics can't fix COVID. but COVID could crush economics. So when I look at this euro just getting crushed, I'm worried that, oh, look at that, I still can't use my drawing tool. I guess I need to reboot my computer. My drawing tool is not working. It just stopped working. I'll try one more time. Okay, not working. I bet you if I force it to stop. Hang on. I have to open my task manager. Hang on. Let's try that. La la la. Yeah, it's taking longer. Boom. Lufle. All right. So I'm worried about this. It's really bad. Okay. It's very bearish, I should say. There's no good or bad. This is wonderfully bearish. Okay. Wonderfully bearish. And in particular, euro has never shown bullishness at bullish prices. It's just been bearish across the board, no matter what's happened. Now, that's not true of the other currency pairs. Many of the other currency pairs are bearish. That's true. But when they hit bullish areas, they respected those bullish areas. Okay? Okay? So, I look at this and I'm wondering how much is of this, because I've been hearing rumors during this whole period that, COVID's not good. COVID's not out, in particular about Europe. COVID's not good. COVID's picking up. COVID cases are getting worse. Whoops, that was my mouse. Right? And now they're shutting down entire countries. It's not under control. Okay? Oh, Raymond says it's 36 today. Wow, that's nice. So that is, I think, the worst case risk to global macroeconomics. Okay? So it is a worst case scenario in that case. Worst case in that case. It's the thing that the government can't just come in and say, oh well, we're just going to add money. Okay. But it will shut down economic activity in areas that are negatively affected. And so Europe didn't effectively manage the pandemic, or it's unmanageable. So we'll see what happens here in the United States. We'll see what happens in Canada. Maybe it'll be better, but maybe the upside is things will not get worse in places like Australia and New Zealand. Maybe they just went through their winter, right? Maybe things won't be so bad in South Africa. Right now that it's summertime and 100 degrees Fahrenheit. It's a nice day. So, wowzer. That's a big, ugly 4-hour candle. Okay? Big, ugly 4-hour candle. But anyways, let's go to Forex.Today, yo. Okay. But how are you guys doing? So we're stationed all around the world. Can you type in a sentence or two about COVID in your area? Is it in control? Is it benign? Is it out of control? Is it getting worse? What's sort of the feeling? You know what? Let's do it through a poll. Hang on. How is COVID in your region? Question mark. Getting better, getting worse, no change. So non-scientific, because it's very open-ended questions, but let's do this. Please answer the poll, just popped up. Let's just kind of get our own sample survey. We need at least 30 people to respond to make it a reasonable sample size. It won't be statistically relevant until we have more than 30. Highlander says, yeah, Michigan leading the way in new cases. Well, Michigan and Wisconsin were really hit last year hard. Please answer the forum, not necessarily in the chat, although I'm reading your chats. Quite bad here in Mongolia. Yeah. Yeah, what info? Well, this is sort of a non-scientific survey, right, Jean-Guy? So I can't just say, well, you have to use this. It's more like, from what you observe and hear, what do you think's going on? Lewis says, can we focus on Forex and not COVID? Look, I'm not being political, Lewis. I'm trying to figure out global economics. So if things are getting bad in certain regions, right, like Mongolia, it's going to negatively impact the Mongolian economy. That's going to contract in GDP. Okay, so no, I'm doing economic research. This is relevant, but I'm not being political. Like this is, like I'm not that dude. I'm just not that dude. So, okay, I'm not, right? By the way, when I go through the world, I talk to everybody. How's business? How are things going? How are your employees? Are you hiring? Or is it difficult? What do you think's going to happen in the next 6 months? I talk to everybody. Okay, good. Okay. All right, getting better, no change, getting worse. Okay. Okay. Interesting. So the next way to do it is then break it down and say, what region are you in, and is it getting better, worse, or no change? Okay. Interesting. Now, like your customer says, same as flu. Okay, I understand that. But when was last time Austria shut its entire economy down because people got the flu? So, I have to look at it from an economic point of view. In that case, it would not be the same as flu, right? So anyways, remember, I'm not talking about anything except economics. All right, so I felt like I wanted to do a review this week instead of sort of forward guidance. I just want to look backwards a little bit. I don't know why. It was just in my meditation this morning. I just felt like I want to go through the journey again. Okay, just kind of revisit where we've been. Okay. Your customer says, you get flu. Yeah, but the thing is, it's very similar, right? The flu and COVID and SARS, all right, they're all very, very, so, but I'm not an epidemiologist, but who knows? Maybe what'll happen is the world will want to put $1 trillion into research. They'll cure COVID and the flu at the same time. Great. Okay. Cool. That would be great. Humanity has to fix a lot of other things too, like income equality. Okay? Big challenges like, why do women earn 30% less? Entrepreneurialism doesn't support that idea. Entrepreneurialism and free enterprise means everybody should get paid maximum. So it's really interesting. Some other system has come along and said men earn 30% more. And then someone will fight back and say, well, that's because women don't negotiate. Well, why do they have to negotiate? It should be non-negotiable. You should earn a full wage, right? So anyways, we have to fix those things as well. Okay? So anyways, let's take a look at going all the way back here. Okay, RBA Meeting Minutes, Governor Lowe's speech. Did you read them? Is it worth going back? Is there anything in there that said Aussie dollar strength? Let me move this out of the way. Okay, so I asked you to read that report here. Okay. Did anything say Australian dollar strength? Oh, gee whiz, Windows, what a crappy feature. Okay. No. 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 Lowe said no. 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 There's nothing that would create Australian dollar strength. What I said 2 or 3 weeks ago is that Governor Lowe is going to talk it down. How many people can confirm that? That I said Governor Lowe, the head of the Central Bank of the Reserve Bank of Australia, in the meeting minutes and in the speeches is going to talk the Australian dollar down. How many people can confirm that is to be truth? Cool. I'm glad you were there. Your customer says, yeah, work for a public university and it's just a table. Yeah, makes sense, right? Cool, but the next thing is I think you should actually read the meeting minutes so you understand why he would talk it down. See, the interesting thing is I said he's going to talk it down. Okay, but how did I know that? I did the work. Okay? Okay? Cyber investment firms is fixed imperialism. Okay, now. All right, so now we're on Tuesday. Average earnings. Okay. Now, you might say 4.9 is bad. Dude, and a 5% increase in average earnings? That's huge. But on top of 6%. So that's amazingly high. Okay, unemployment rate in the 4s and falling. That's good. Okay. So remember, the conversation right now is where if Governor Bailey and the Bank of England will raise interest rates in December. So unemployment is nearing 4%, which is fantastic, and wage growth is up, which is what you want to see, because it's not necessarily prices. You have to understand that. There's a misconception of what inflation is. Inflation is high prices. That I understand. Now, there could be inflation because the currency is weak and you have to spend more to buy foreign goods. That's one. Or there's more demand than there is supply. So now, I'll never forget when I was a kid, you would see on the news at Christmas time, moms in a full fist fight, punching each other in the face, trying to get a Cabbage Patch doll. And then later on, prices going to tens of thousands of dollars to buy a Beanie Boo. Demand was higher than supply. Okay. That can lead to high prices. Or it's the same thing but different. There's no supply, right? Like the demand is there, but there is no supply. So one is like crazy demand. That'll always, like, if 5 different families are bidding on a house, the house price is going to go up, okay? But the other side of the equation is, what if they're bidding on that house because there's very few houses available? And that's why all the families are bidding on it, not because they actually like it, but there isn't much choice. So it's kind of like buying Huggies diapers in Venezuela. Not many people want to buy it because they can't afford it, but if you want to buy it, you're going to have to pay a lot of money. Okay? So anyways, so when we look at whether the Bank of England is in a situation where they should raise interest rates, well, you'll look and see, well, do people have jobs? You want to look at jobs because if you don't have a job, you don't have any money. If you don't have any money, consumption falls. Okay? Well, if you have a job, and it looks like most people have jobs, 4% unemployment is probably close to full employment. So good kudos to Great Britain to figure that out. But why are there high prices? What created the high prices? Because that'll tell you whether it's transitory and not transitory. So if it's just high prices because there's not quite enough product, then eventually capitalism will work. The product will show up. In the beginning, you might have to pay a little more, but once supply equalizes with demand, price will normalize, find its equilibrium, and everyone will be satisfied at reasonable prices. The other side of that equation is not only do you have a job, but do you make more money? And if it's that angle, that would be less transitory. Because really, you don't really care if gas prices go up 1%, you make more money. You don't really care if your rent goes up 1%, you make more money. And really, it all equalizes because then other people have more money and then they can afford the higher price. And what happens is it sort of, again, kind of finds an equilibrium. But if prices are going up but wages are not, then it would be more transitory. If wages are going up, then it's less transitory. And it does give more potential, let's say, more support to the idea that the Bank of England can raise interest rates. Now, Governor Lowe, if you want to go back to the RBA, their wage growth is in the 1s. Okay? Not at 5. Okay, you see? So Governor Lowe is a long ways. Governor Lowe said he wants to see wage growth in the 3s. So if the Bank of England has wage growth at 5, then one could conclude Bank of England will raise interest rates before the Reserve Bank of Australia. You see that? So that's how I want you to kind of go through this. I want you to not just look at headline numbers, but what do they mean and what caused the headline numbers? The more you understand cause, the better you'll be able to make. Okay? Milo says it's now 2.2. Yeah, I'm going off old data from, it's probably close to a month old now when he said it was in the 1s. So now it's in the 2s. Okay? But they still have a long ways to go. Think of it this way. They need 50% more wage growth to get it to 3. And at 3, they're only interested in talking about it. So even at 3, it's probably going to be a year after that. Okay? Romania is getting better. Okay? So still not good, but getting better. Okay. Well, thank you for sharing that. Okay. What else is going on in the world? GDP, okay, 3.7. It seems to be lower than other parts of the world, huh? Going to the United States, retail sales are up. Okay, big numbers here. Okay. So, food for thought here. Walmart, okay, kept prices low. Okay, and had less margin, less profit margin, less profit. And the CEO actually, and I liked this, he said, as a company, we make investments. We make investments into our supply chain. We make investments into our people. We make investments into our facilities. Okay. We make investments into climate. These things cost money. And he said, currently, as costs have gone up to run our business, we are investing into our customer. We are taking money that would normally line our pocket, and instead we're pushing it into the business, and Walmart is keeping prices low even though costs have gone up. We look at making less money as an investment. And he's thinking too, if Target doesn't do that, then you go to Target and you're like, wow, I can buy this thing at Walmart for cheaper. And you go to Walmart and so it's a really interesting strategy. Okay? Sales are up. Why? Well, it seems logical, right? Walmart is participating in deflationary business practices. They're keeping prices low. There's no inflation at Walmart. Cool. What else is going on? Home Depot's CEO said the opposite. They passed on price increases to the customer. If you want to buy lumber, it might cost you more. If you want to buy a faucet, it might cost you more. Why? Oh, well, transportation expenses have gone up. Even if the faucet really hasn't changed. Well, it costs more to warehouse it. The employees have to be paid more. It costs more to ship it on a truck. It just costs more now than it did. And if you need a faucet, screw you. You're going to have to pay a higher price. Well, what happened? Sales are up. Which means consumers have the money. Okay? Now, people might shop at Walmart to save money because they need to save money. But if you go to Home Depot, you've already budgeted the money to do a project. You're going to spend, I don't know, 10 grand fixing your bathroom. So if it costs you, $12 more for your faucet, you pay it. But whatever, they played their hands completely different. Nonetheless, their customer base is totally fine with what's going on, at least in the moment. Okay? So I like to look at, again, retail sales. What does it actually mean? How is it affecting business? How do business managers make decisions? In China, retail sales are reasonably good. So I'll put China here. We learned that recently. Sales in China are reasonably good. But if you look at the subcomponent, people 20 to 35, we'll say young workers, not senior executives, not middle management, but the people working, the front door, answering the phones, doing customer service. Those people, retail sales are down. And unemployment is negative 14%. So who's going to buy iPhones? Okay. Is a 22-year-old in China going to buy a $1,000 iPhone if they're unemployed? It's food for thought, because that will impact Apple's business in the future. So I'm interested in so now as an economist, you might say, okay, headline numbers I'm interested in, but I want to drop into the subcomponent and see, right, in the subcategory, how this age group is doing. Will this improve? Will we have unemployment normalize? Because think about it. A 60-year-old doesn't consume except for food and rent or something. But 60-year-olds don't buy new phones every 6 months. And they typically don't go to rock concerts and buy giant TVs and all these different things. And of course they don't buy knives and forks and plates and stuff, right? Because they already bought all that stuff years earlier, right? Where a young person moving into an apartment for the first time or starting a family, 20 to 35-year-olds spend a lot of money on diapers and baby food and, that kind of stuff, where a 60-year-old is consuming less. They're downsizing their house and all that kind of stuff. So anyways, if the young group is, struggling with employment, consumption is going to fall. You see? So you might want to track the unemployment rate of the young, and also therefore whether they're and how their consumption's doing as measured through retail sales. Raymond, yeah, maybe. Yeah, I'm not arguing that. But right now, I see a lot of what's happening is probably COVID related as well. So we'll have to take a look at that. Okay. But typically, Raymond, when the United States spends, what is it now, $7 trillion, the money supply goes up and the dollar falls. There's just so much of it out there. There shouldn't be a reason for it to strengthen. Now, when the dollar strengthens, it's usually because it's a safe haven as a reserve currency, but that happens when the rest of the world is in trouble. So right now, especially this time of year, if the dollar's strengthening, it seems to indicate that the rest of the world is struggling. So if Europe is going to shut down and China is already struggling, that's probably the bigger picture. Okay? So I want you to think of it that way. But, ultimately, it's all our interpretations. It's all subjective. You have to think about it, do the research, and then back it up and have bullet points. But I think it's CNBC, right? I think CNBC does a thing where they bring in two experts, and the two experts get something like 1 minute to make an argument on a subject, and the other one gets the counter argument. So they already know whether, let's say someone is bullish or bearish or hawkish or dovish, or, let's say the argument is whether the Fed's going to raise interest rates in 2022. So one will come out and they're like, well, yes, they're going to raise interest rates, and here's all the reasons why, and blah, 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 blah. And they get a minute or so. And then the other person gets on and they're like, no, the Fed's not going to raise interest rates in 2022. And here's what I look at, blah, 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 blah. The point I like is ultimately we don't know what the Fed's going to do. Even Jay Powell doesn't know if he's got a job. And by the way, we can talk about that as well later today. But the thing is, they don't know until they get to the meeting. And then, and then they go and make a conclusion. So all we can do is make educated guesses ultimately based on our own research, right? And I love that idea that there's point and counterpoint, right? Okay. So anyways, So retail sales, Americans are spending money. What's worse is this. What if prices were high and Americans were not spending? That would be worse, wouldn't it? That's the whole stagflation idea. Chanson, didn't Powell do the right thing, though? The debate is not the Fed's response to COVID. The debate is the Fed's response after COVID. Okay? And also, this is political. So when people go to the gas station to fill up their tank, and they see it normally would cost them $25, but now it costs them $35. What do they think? Oh, this is an imbalance of the supply-demand equation. Is that what the average American thinks? No. What they think is it's a conspiracy that the oil companies are raping and pillaging the average person and that the government's in on it. Which might actually be true, right? And so what happens is somebody's got to pay. And it's usually the President of the United States. And we've seen this before. It does, right? Clinton was accused of, if you guys remember, like Monica Lewinsky, and that scandal of how he was, having intimate relations with his intern in the White House in the Oval Office. Great. Approval rating went down a little bit. But if gas prices go up and it costs the average Joe $10 more to put gas in his tank, guess what? President gets booted out faster than anything. So someone's got to take the fall, okay? And it's interesting. The government won't come out and say, well, it's because the government added $1 trillion and then another $1 trillion, and then we added $1 trillion, and now we're adding $2 trillion. They don't say that's what's causing inflation. Okay? Okay? That's not what they're saying. They're saying the central bank mismanaged things. Well, I'll tell you what happened the last crisis, 2008. I was there every living second of that. Okay? What happened was, by and large, the government did nothing, and the central bank did everything, and there was a long, slow recovery. Okay? Then in COVID, we got hit. The central bank immediately slashed interest rates, then immediately got, did quantitative easing. And then well after we hit the bottom, the government decided to come in and throw $1 trillion at it. Okay. And then another. Wait, what was the other $1 trillion for again? And then more. And then more. And all of a sudden you're like, dude, how does this fix COVID again? I thought the problem was COVID, right? So it's a really odd response and probably over-responded, and that's probably where the inflation comes from. I don't think the inflation comes from quantitative easing. Okay? I don't think our problems are coming from quantitative easing. We went through quantitative easing before, and it lasted for years and years and years and years and years, and we were at full employment and still couldn't get any inflation. Consumer spending was through the roof. Everybody in the world had a job. We were at 3-something unemployment with a huge measure for workforce. but we had no inflation. So anyways, now we got rampant inflation, whether it's transitory or not. An American says, look, I got to put 10 more bucks in my tank every week. That sucks because they don't make a lot of money. Okay, you have to spend all your tips now on gas, on the higher price of fuel, right? So somebody's got to pay. So who's going to go down? Because remember, Trump did two rounds of quantitative easing, and Biden's done, right? So who's going to take the fall? The President of the United States? Well, because it's gotten worse and worse and worse. The concern about inflation and the rhetoric, the zeitgeist of the United States over the last month and a half is really leaning toward inflation now. And it doesn't matter if it's transitory or not. It's just on the mind of everybody now and on every TV station and every newspaper and every radio station. Okay? So, what's going to happen? Powell's going to get fired. Okay? By the way, typically this decision of whether to re-up the person in charge of the Fed is already done. Usually this decision is made late August, early September. Here it is November, middle of November. No decision has been made. I think it was Wednesday of last week? They said, no, I think it was Friday of last week that a decision was imminent. Then on Monday, the president was asked, when is it going to be decided? He said in 4 days. Now 5 days has gone by, and they say the decision will be made by Thanksgiving. Well, what happened to this imminent decision? Okay. The White House is going back and forth. They haven't made a decision. If they were going to re-up Powell, it would have happened. The White House is looking for a scapegoat. Powell's going to take the fall. There you go. Welcome to politics, huh? So I want you to break these things down, things like retail sales. What does it mean? Who is buying? Who is not buying? So that we can kind of bring these things together. Okay? Australia is not going to raise interest rates. Well, how about New Zealand? Well, that's a different economy. We can look at that. But for Australia and New Zealand specifically, okay, I want you to do deep dive research into China. And not the headline numbers, but the subcomponents of things. So like, is it retail sales that you should be looking at? Yeah. But what about on the export side? Does that help you? No, actually, that doesn't. It tells you if there's economic activity in China and therefore maybe demand for energy and therefore demand for coal. And that economic growth through increase in consumption might lead to things like demand for steel because you need to build new stuff to sell. So more cars will be sold, more anything with steel in it will be sold, or more factories need to be built. And so you can look at it that way. But we're also really interested in the exporting business from China because it's still a major exporter, and it shows you demand from countries outside of China, the ones that are importing from China, right? So you want to look at factory capacity and utilization statistics. Are the factories up and running? And if so, it's 60%, 80%, 90% capability, right? James says, hey, Wayne, did the 2008 financial crisis ever end? Quantitative easing and low interest rates have lasted over 10 years. Is this a correct statement? What have I missed? It's somewhat true. And of course, the answer has to do with how do you measure if it ever, right, ever ended? Well, GDP growth was there. We were at full employment. Inflation was stable. Consumption was good. Investment was reasonable. American corporations were profitable. So it doesn't sound like it was an economic crisis. We were not in recession. So you could argue, James, well, when we got out of recession, that was the end of the crisis. Okay? Also, quantitative easing did end, and interest rates did go to what, 2%? Okay, and the stock market at least doubled. So, right? So that could be your argument. Now, could you argue the other side? Yeah, you probably could. But those are all pretty reasonable measures. Okay? Lucas says, hey, if they boot out Powell, will the new guy, it'll be a new lady, raise rates right out of the gate? No. Remember, we're talking about politics, not logic. Okay? So Lael Brainard would be the new head of the Board of Governors. And she is as dovish, maybe more dovish than Powell. So ultimately, Lucas, nothing's likely to change quickly, if anything. So Powell would be out, Brainard would be in, and nothing would change. So why do it? Well, it's Powell's fault that you have to pay more money for everything. Okay? That's what they're going to say. And so he takes the fall. He's going to be the fall guy. Now, Brainard, she'll do a great job. She's smart. She's wicked smart. She's dovish. She is more likely to tweak the regulatory compliance of the banks. So that's her thing. She's more, she's an economist, which is, Powell's not an economist. I think she's an economist. I'll have to double check that. I would guess that she's an economist, and she leans more like, she's more of a sort of a banking economist. Like, she's more of a regulator. So Powell wasn't a regulator. He was a businessman. He's not even an economist. So Brainard, I believe, is an economist, and therefore she does understand what's going on. She ain't no fool, right? But she's a regulator. Oh, that makes sense. Thank you, Victor. Hey, I have an economics degree from Harvard. Woo! All right. It's it's that one right in the middle. Oh, there we go. That's my economics degree from Harvard. All right, cool. So we're equals, she and I. Sure. Okay. But the thing is, so she'll lead, if there's any radical change, it's not likely to be a monetary policy. She might tweak a little bit on the banking regulatory compliance side, but probably not a lot. So ultimately, she'll make the best decision she can, and I don't think it would be radically different from what we have. Yeah, hey, thanks, right, Russ? Yeah, click the like or the hate button, either way, right? Actually, she says she likes the business person better than the economist. Well, from recent history, okay, I can only go back to like Nixon. I'm not sure before that. Honestly, I'd have to do some more historic research. Okay. Nixon was a horrible president, from my understanding and research, in so many ways. And he actually got kicked out, which shows you how bad, because like we've had a lot of presidents try to be impeached and they're not impeached. Dude, he was bad. And the economic policies of that time were terrible as well as his political. And again, if you disagree with me, I'm not here to debate, but from what I know, and it might not be much, but it didn't lead to anything good, and he was fired, right? So anyways, So, so eventually, we move forward in time, and then Carter comes in. And the economy is in terrible shape at this point. Okay? And so it's not Carter's fault that the economy is in bad situation, but it is his responsibility to fix it. And so he hires a non-economist to run the Fed. And it was a total disaster. And inflation went from bad to horrid under Jimmy Carter. Horrid. So now Jimmy Carter only lasts one term, and then he's replaced, okay, by Ronald Reagan. Ronald Reagan does a year or two of trying to fix the economy. He still can't do it. And his popularity was not strong. So if you're a Republican, you're like, Ronald Reagan's the greatest president to ever live. You're like, whoa, 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 dude. Not in his first or second year as president. People didn't like him, including the Republicans. Why? The economy sucked. But guess what? When Carter left, the Fed chair was replaced. Paul Volcker took over. And so now Reagan's a little bit desperate because the presidency is not doing well. His approval rating's falling. The economy sucks. There's crime all over the place. New York City is bankrupt. Okay? If you watch, by the way, go find a movie from the sort of like mid 70s to early 80s. Go find an old movie that shows New York City. It looks like a third world country. It's crazy, right? Like, it's crazy. You don't understand how bad things were at that point because we had a whole generation of not good economic decisions. So anyways, going back to what happened was that Paul Volcker said, Mr. President, I can fix the economy. Okay? I can fix this. But to do so, I have to crash the economy on purpose. And I will kill inflation. New Jack. Yeah. I will kill inflation, but to do so, I will have to purposely crash the economy. Think about the president now agreeing to this. Is this a confident person that says, no, I'm the most popular person here and I can fix this. I'm the papa for all Americans, right? I'm the big kahuna. Dude. He's like, dude, if you need to crash the economy and you get inflation under check, I'm already crushed as it is. So he gave Paul Volcker permission. And he jacked up interest rates to like 20%, bro. Something crazy. Serpico's a great one for that. Yeah. Taxi driver's probably a good one. Yeah. New York City was rough, guys. It was like, you go through some of the boroughs and like the buildings look like they've been bombed out, right? Like, anyways. So my point here, going back to Maida, it's not an argument, it's just sort of a history lesson for those that are new. I think Maida's heard this speech probably 3 times, but the non-economist made things worse. Okay? And we had to kind of hit rock bottom for the new president to capitulate to a hardcore economist. Okay? And Paul Volcker only recently passed away, but I think I'd like to read some of his books because this guy, he was hardcore. He was hardcore. He knew what he was doing. He was a big dude. He was strong. He was powerful. And he did what needed to get done. And he was successful. And then we had a 30-year bull run. And Ronald Reagan was president of the first 6 years of that bull run. Right? And then his vice president, George Bush Sr., became president of the United States. And that went up until the war, right? The economy was just doing crazy, redonkulous, right? So Interesting. Was it really those presidents, or was it Paul Volcker? And I would argue it was Paul Volcker. Sure. Okay. Yeah. Okay. Made it. That would be great. Sort of both, right? Yeah. I mean, there's even an argument for that. That might be it, right? That you shouldn't just be an economist. You shouldn't just be a business person. So anyways, I appreciate that, Maida. You're kind. Okay. Inflation out of Great Britain, 3. Not out of control. Okay. Okay. CPI year over year, 4. Because that's oil prices. Jordan, what's said? Okay, taking a look at Europe. Year over year, 4.7. Yeah, they got some inflation. For sure. Okay. Okay, Canada's got it full show. We're looking at, let's say, month over month. Where's the year over year? How come there's no year over year? Well, I guess we can compare month over month. If we do year over year core, month over month or core, month over month headline. Okay, we'll do month over. Canada 0.7. Okay. Europe 0.8. Okay. Now, the interesting thing here is that Europe tried for years by spending hundreds of billions of euro to create inflation, and they couldn't do it. Okay. Chanda treasury currency. I don't know anything about that. I only read government reports. Okay. Or institutional reports, that kind of stuff. So we have inflation now, so what's the big deal? Well, the big deal is a lot of this, you'll see has to do with transitory inflation. You could argue that core removes things like food and energy, which are volatile. So much of this is, the volatile prices, and you remove that and it's much more normalized. One thing as an example to think about is oil prices, remember, went from 60 to 70 to 80. Okay. And now we're back in the 70s, right? Like oil prices went up and they've come back down significantly. China and the United States agreed to work together to increase the supply of oil, okay, through tapping their Strategic Petroleum Reserves. That's deflationary, one of probably the biggest inflationary impact. The thing that increases or decreases inflation the most is oil prices. So if oil prices go from 80 to 70 and stay at 70, let's say they come down that much and they hold that low and not go to 100, that will start to lower headline inflation. and quite reasonably, in fact. So if it was 3.4, just a sustained fall in oil, let's say from 80 down to 70, and then we just fart around there, you'll probably get this down to 2.8, and people will freak out a lot less. So when Europe was trying to create inflation, and they were spending hundreds of billions of euros to create inflation, and they got zero return on investment, I said, well, what they should do instead is take their hundreds of billions of euros and drive up oil prices. That would create your inflation. Data says, but why the United States can't push on OPEC to adjust supply? Because OPEC is likely at near full capacity anyways. Okay? So what we might find, okay, is that when COVID hit, demand fell, prices fell, what happened? USA stopped fracking. Okay? Stopped exploration. Stopped CapEx. Okay? Lowered leverage. So on and so forth. Okay? That is probably the biggest impact. OPEC probably is just doing what OPEC's doing. Okay? And now it takes a while. You can't just like flip a switch. I mean, dude, sucking oil out of the ground is a capital intensive, labor intensive, time consuming process that and it's very expensive because of that. So the lower leverage means even with the higher prices, they're not going to spend more than they're spending. They're not going to overproduce. What they found is last time, yes, U.S. production went through the roof, but so did expenses, and by the time they sold oil, they actually didn't turn much of a profit. So now they're like, dude, oil prices are at 80 and it costs 55 to produce a barrel. They're like, okay, that's good. Now we're turning a profit, but they're not going to jack up supply. Now they have to go back to wells and start fracking again, but that's not an easy thing. That literally takes months of planning, and then you need to buy product, both sort of chemical products and machinery, but that might not be available. Just might not be being manufactured right now, as you know. Or prices have doubled, and they're like, no, I can't make the numbers work if the price doubled. Or you buy it, but you can't get it shipped out to the middle of a field in Texas. There's no truckers. And so there's a lot of things you're like, hey, we want to start fracking, but, you know, it's just challenging. Okay? And maybe new wells haven't been purchased. So it will take time. Okay? So Theta, like, why can't they push? Well, here's the other side. Here's what I think too. Let's say you're Saudi Arabia. Oil prices drop to $20 a barrel. What phone call do you get from the President of the United States? Think of all those frackers now. All the American oil companies are losing money. They need $55 a barrel to break even. Oil prices are 20. They're all going out of business. Oh, is that right, Jeff? Yeah, skid steers are, rental prices have gone through the roof. Okay. I think I was paying $1,000 a day for a freaking skid steer. Can you believe it? I paid $3,000 for a rock breaker excavator with the rock hammer on it. $3,000 a day. Plus the skid steer is $1,000 a day. Plus I had like that giant excavator. Dude, amazing. So the United States calls Saudi Arabia and they're like, like a Pomeranian, like a yappy little dog. This is all your fault. Prices are too low. You gotta cut production right now. So they cut production. Then oil prices go to $100 a barrel. United States calls up Saudi Arabia, and what do they say? Oil prices are too high. And I think at some point, Saudi Arabia is just like, who's on the phone? Oh, it's America. Tell them I'm not here. I just don't want to. Tell them we're not here. We're not. I'll come back Monday. Like, right? They're like, seriously. It goes up, it goes down, and we keep getting phone calls, right? So that's how I think of it. And it's sort of funny. It's sort of cartoonish. But I bet you there's at least an ounce of truth in that, where Saudi Arabia is like, oh my God, is America on the line again? What do they want? Oil prices need to come down $10. Gee whiz, dude. Why don't you take care of your fracking business? Because you got to remember, 10 years ago, the United States exported zero oil. None. Not even a barrel. Okay? Let's say 2 years ago, the United States, I think the largest consumer of oil in the world, it might be China, but it might be the United States, if not very close, produced all of its needed oil. So back when, 10 years ago, if the United States exported no oil, what was happening? There was a huge deficit for energy. Huge. The United States was addicted to Saudi Arabian oil. Addicted. We needed it. Just one more hit. Just one more hit. Come on, Papa. Right? Just one more. I just need one more hit. And this just one more hit. Totally addicted. Sucking in incredible amounts of oil out of Saudi Arabia. 2 years ago, the United States produced all of its oil needed and exported market impacting levels of oil. Not trivial sums. Hey, Bobby, just one more. Anyways, like we went from sucking in massive amounts of oil from Saudi Arabia to suddenly, we don't need any from you. You're not the swing producer anymore. The United States is the swing producer. We don't need Saudi Arabian oil. We're all good. In fact, we're going to still start selling energy to Western Europe so we can so we can wean them off Russian nat gas. Okay? Huh. So we will get back to that, but not this year. Okay? When we do, okay, I want you to how about this? If or when we do. So now you can go to OPEC's website, EIA website, IEA website, and do some research and say when, if, will and when will the United States return to oil exporting? Okay? I want you to think of that. Will it ever happen again, or is that time long gone? But if it does, how long will it take to get back to the United States exporting? Actually, Meta, Joe Biden just approved additional oil drilling in the Gulf of Mexico. See politics? He's the man with the plan, going to save the environment. He's going to be tough on the big oil industry. Well, not until oil prices go up, and then shoot. Start drilling, boys. Get me some oil. Get that gas price down. Okay? I don't blame him, but it's interesting. Yeah. It was signed last week, I think. So anyway, I want you guys to go back and do this research. Will the United States return to supplying all of its own energy, American cars driving with American gasoline and American oil, or not American batteries, right? And will they ever export? Because now that's not only taking care of demand, but also supply globally, right? So again, if and when that happens, what do you think will happen to oil prices? Let's say the United States 1 year from now produces 50% more oil than what's happening today. No. I haven't. Yeah, no. So anyways, that's not what I'm saying. Okay. All right. So, right. I'm just sticking to the economics, and I did study international political economics too. So I got that in me, but I'm not doing the conspiracy theory, all that kind of stuff. But you can believe, you can say it, but no, that's not what I'm saying. I'm not that strong. Okay. Okay. But I am saying if you mentioned, the White House is never going to help stimulate oil production in the United States. I don't think that's true. I think they have to. Okay? Cool. So here's the thing, guys. If you said what the prices will fall if or when that actually happens, guess what? You just said inflation is _transitory. Okay? Now again, China and the United States just tapped into their SPR, driving down oil prices. That is deflationary. We're going to see it soon in the economic data that inflation is leveling off. I'm telling you, oil and gas prices, so oil prices are inflationary. Gas prices hit retail sales. It comes up in a couple of places, okay? And you'll see inflation adjusting or at least stabilizing, but probably coming down, depending on what other things are doing. So until we get to more oil being produced, okay, the tapping the SPR increases supply, lowering price. Okay, quick chart. Got to do our quick chart, right? Quantity, price. Okay. SPR impact. Okay. Okay. So you got your demand. Demand is fixed in this case. Demand is demand. People need to go to work. Demand is demand. So we're talking about next month, let's say, or this month, or whenever they actually do this. Okay? So it's on the short run. And then you have supply 1. So we need to adjust supply. So the first thing is you have current prices at the pump, price is 1, at this equilibrium. Okay? Quantity 1. Okay, so what are we going to do? We're going to increase. So we need to move quantity 1 this way. Okay, we need to increase quantity 1 to quantity 2. Okay, so we have to say we need to cross, let's say, around here. We will label this supply 2. So what is the effect of increasing supply then? Well, we have this new Q2 amount, right, of oil in the market due to the increase of supply of oil from the Strategic Petroleum Reserve. And prices come down from price 1 to price 2. And this is how you would properly label your chart. You have to have the title, right? You have to label your chart. You should have arrows that show the direction, increase in quantity, decrease of price, and the shift of the curve, okay? All that has to be in there. And so that's what's happening. But then if you look at that and you're like, well, tapping the SPR would lower price, and the importance of oil and energy prices, and thereby gasoline prices and jet fuel prices and plastics prices and tar prices and all that get impacted as it's refined, right? But eventually it comes to the consumer and it's deflationary. But sort of the level of impact oil has on inflation is greater than many other things. So if your KitchenAid fridge or if your Samsung fridge goes back from $1,400 back to $899, it's probably not going to radically change consumer prices in the United States. It's sort of a one-off kind of thing, and we get, it'll have some impact, and maybe it'll spur retail sales or not, we don't know. But oil impacts almost every industry. So the farming industry, for example, will pay less for fertilizer prices because fertilizer comes from nat gas. Nat gas is a byproduct of sucking oil out of the ground, and it's also a byproduct of from cracking crude into products, and you're separating everything. And at the very, very, very top, even above jet fuel, you'll get like natural gas because it's so light. It's gas. So you get all these byproducts and right? So anyways, that would lower inflation. Okay? Well, Theta said, well, what about the market estimate of oil prices going to 100? That was before the two largest economies in the world decided to tap their SPR. That changes everything. Does that matter? Well, you have to say, wait, China and the United States are going to increase oil supply. Meanwhile, OPEC is basically pumping at 100%. And the Russians are too. And the Venezuelans are too. And probably Iran is getting oil out through all kinds of holes in the embargo, and they're getting their money. Like, what, Libya wants to be the good guy and not make as much money as they could? Dude, so OPEC is, if you look at how a cartel works, if one guy's cheating, they all cheat. And this is no sort of, I'm not naysaying any member of OPEC. I'm just saying that's how cartels work. Okay? So everybody is producing oil as fast as they can. In the United States, they can't produce anymore because they shut everything down. So you can do a rig count. So why don't we do a rig count next? Okay. We'll be done. We're done with the calendar. So let's do a rig count. Okay. So the United States has to restart their machine. That could take 6 months to a year, but when it's up and running, inflation is going to come down. AKA, wink, wink, nudge, nudge, transitory. Hughes, Baker, Baker, rig count. All right, so this comes out Friday, so we're going to get an update later today. This is old. This is way back November 5th, okay? We have 556 rigs producing oil. That's 6 more than before. 244 more than a year earlier. Well, that means we were down here like 200 or 300 rigs producing oil 1 year ago. So we're lucky to have 556, right? Look at Canada. Dude, come on, Canada. You need more rigs than that. Now, what I was hoping was to get even further back. North American rig count, international, U.S. Can I get a bigger number than that? Yeah, year 2000. Maybe that'll do it. Do-do-do, do-do-do. Do-do-do-do-do-do. Oh, this ain't going to be what I need. Directional, horizontal, vertical. Can I just get total? Which basins are producing? U.S. count by basin. Get oil and gas split. Oil by state. A week ago, a year ago. So this is just doing the same thing. I thought they said it went all the way back to year 2000. Oh, is that right, Lucas? Yeah, the rotary. So anyways, I think what you guys want to do, and you're going to have to spend some time if you truly care about this stuff. Okay? Maybe you start with the Oilfield Knowledge Center. But what you want to say is, what is the 2018 number, let's say, versus 556? Okay? Is 556 good? Well, let's say in 2018 it was 3,000. You're like, oh my God, we're not even close. But maybe it was 600 and you're like, oh, we're basically back to where we were pre-COVID. You have to have everything in context. Okay? The dollar will look strong if everything else is weak. So in context of what? Is 556 good? Well, you want to do it over a base, and a base would be like 2018. So how about Baker Hughes rig count. Come on. Say I don't want rig count. Chart. Okay, that's actually what I want. And that's the same. That's the same. Trading economics. This might actually be different. Let's go 10 years. Okay? So we could be at 1,600. Arguably. We were at 800 and we dropped to 200. Now we're at 600. Okay. So all I'm saying is it's good, but it can be better. 200 is frightening, and we're working our way back up. And notice it's slow. And like I said, going back out here, this increase was really fast. And it had to do with cheap money. Low interest rates creates cheap money, by the way. So you could get cheap money and you just go out there and you drill like crazy. You just issue a bunch of bonds, pay low interest rates, and whatever, and you're producing. They may have overproduced or over-relied on leverage, and that's what leverage is. Cheap money is leverage, right? So ultimately, we're at 550, and 800 is where we were. 550. And we should be on our way to 800, let's say in a year. And oil prices will probably be less inflationary. Stock market just opened. Oh my God. Have a wonderful Friday, everybody. Have a wonderful weekend. Thank you for being in my life. Thank you for your positive contributions to this community. These are interesting times. In many markets, it's unsettling times where we're trying to get through into a global recovery. But Europe is not doing well. It was supposed to recover. They were supposed to have this taken care of. And it never got done. Europe never took care of it. We're going back into problems again. That's a very large economy of 400 million people, and they're not doing well. China is struggling, maybe somewhat of COVID, but they have some other problems like over leverage that often happens in a sort of catch-up growth economy. Now they're entering into a mature economy and they have to go through some growing pains. So we got some challenges. And in this winter, if China goes down with COVID and the United States goes down with COVID, oh my God, it could be ugly. It really could. I am planning on buying dollars in January. Maybe I'll buy dollars before that if I believe COVID is now the case that's bringing down demand. See, if demand falls, I buy dollar. If supply falls, I probably sell dollar, right? So anyway, so if demand destruction is occurring because of Europe being shut down, I will move toward buying dollar. I probably won't buy Japanese yen, though. I'll probably keep that for sort of the recovery side of the equation. So like when things are bad, I buy dollar. When things are good, I sell yen, for example. I'm close to that decision, but let's explore that next week, huh? So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend. And again, thank you for everything that you do. I wish you the best.